Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is November 20th, 2015. It is 9 a.m. Eastern Time. For those of you that are here for the first time, welcome. For those of you that are back, welcome back. Should be an interesting session. There's always something new to learn. Before we continue, let's go to the disclaimer. Disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and Forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation or an offer to buy or sell future stocks or Forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance indicators for methodology are not necessarily indicative of future results. So now that we got that out of the way, let us take a look at the calendar this morning. And there really isn't anything for us this morning. It was all Canadian news. Euro confidence, consumer confidence will be coming out shortly. Oh my God. Just doesn't look good. Maybe for last month's number it does, but right now, I don't know. We'll see. It'll be an interesting number within the hour. I'll be looking forward to that one. And then we have FOMC member Dudley speaking today at 11:15 a.m. And then Williams speaks on behalf of the Fed as well at around 12 noon Eastern Time. So, being that said and done, let's take a look at the charts. Not that one. We want to see this one. Now, let's start with the futures, and then we'll work our way down to the FX. Now, the Dow's been going up significantly in the futures since yesterday. Got the signal towards the end of the day. It continued during the Asian session and hasn't looked back. It's gone from 17,698, which is practically 17,700 to 17,786. Well, that's not bad, for overnight trading. We'll see how it reacts right now when the market opens. Don't really see a reversal that I can put my hat on right now. Quite honestly, it's just not there. I think they're still bullish. I think they're still going to drive it up a little further. Bonds are a little different, of course. We'll take a look at bonds real quickly and see what they have to say. Bonds are bullish. I mean, yes, you would think they would be reacting the opposite way right now, and I say that because of the fact that the Fed is planning on raising interest rates at their next meeting in December. So I'm still a little disturbed by the reaction in the market, but you never know. You never know. We don't really care how they react to it based on the fundamentals. We care how we find trading opportunities. Now, this trade in particular right now, this is on a 10-minute, but it looks pretty interesting. I'll tell you why. Because as they came down, they did announce long. However, and before we continue, let's go over the indicators so that we don't step over ourselves. The gold dots that you see here, this is an algorithm that we designed, which basically announces three things: volume, momentum buildup, and liquidity. That liquidity is going to come into the market. And that's very unique because when you get a signal from here, we've designed it in the market analyzer to alert you. So we've designed a template that tells you when it's in congestion, when there's a wide bar, when the power dots are formed, when it's price to congestion to the trend stop. So it sort of gives you an idea what you should be looking at or for. Now in this case, this is announcing on the 15-minute that they're trading very close to power dots. They're 10 ticks away, which is somewhat reasonable. But what I wanted to go over this trade is that there's already some volume divergence to the downside here, and you can see it here actually. It's very unique when we look at that, but let's continue. These are trend dots, and these are unique because it allows us to see how price action is reacting around them. These little plus signs that you see here is a trend stop, is an ATR that we use. These little magenta peak dots here, these are pivots, and these are micro pivots, and what they do is that they allow us to target the next price level that they're going to hit once they go directional. These little dashes that you see here, as confusing as they are not the open and close. No, do not confuse that. In actuality, what we've done with this new algorithm that we created is called the Phoenix price identifier, and what it identifies is something that you've never seen before. And we've talked about it over and over, but I think it's something that most of you will be very impressed with. Now, there's a lot of people out there that talk about order flow, but they don't really understand it in a profound level, and they're using the wrong formula. I know this because I confirmed it. We designed the correct formula based on their mistake. See, what they do is that they give you the average where you have the most volume being offset at a certain price within the candle, which is wrong. That's not where the commitment of traders is. In actuality, what they should have been doing is isolating the price level that the buyers prefer to buy at and that the sellers prefer to sell at. And that's what each dash represents. Now, that's unique because the way that we've designed it actually shows you that there truly is an imbalance in the candle. And that in itself tells you that there's an imbalance in volume and order flow, which is something that has evaded retail traders for many years, which now is at our fingertips. Why? Because we're the only ones that have been able to correct it and interpret it in the proper manner. Now, I'm sure most of you have received our latest ebook and seen our latest videos. We also have a YouTube channel, Phoenix Trading Strategies, where we post videos of the webinars that we do. So it allows you to go back and see what we've done. And usually, we trade on the live edge of the market. So we look for trading opportunities in the live edge of the market. Now, being that said and done, it does give you the opportunity to go back and analyze, are we on the right track, giving you information, or are we wrong? Well, that's for you to judge, not for me. I believe that we're on the right track. I believe that we've taken this to the next level, and because of that, you're here. Because everything that you've seen out there hasn't really made sense until now. See, this trade, for instance, it already took place, and even though I'm looking for a new trade, this was the real trade that should have been taken. Why is that? You see how when they started their trend to the downside, there was an imbalance in the order flow? And why do I say that? Because you have here, as price action started to come down, you have the buyers that are not in agreement. You have the sellers that are dragging this down, of course, taking the trade down, but the buyers are not in agreement, and they're at the very top of the candle. Where here, they're at the middle of the candle, again, not completely agreeing, because if they would, the point of control for their purchasing would drop significantly. Here, as they continue, again, you see an imbalance. And normally, as this begins, you start to see, okay, when are the buyers going to start to bring in volume? Well, normally they'll give them 2 to 3 candles, and then they'll come in and bring in their liquidity to stop the trade or to give notice. You have 2 candles before I turn this trade around. So here, for instance, the way we identify it is that when we have a power dot form, it allows us to look back 2, 3 candles and analyze, is this trade really going to go long? And so we look for that imbalance in the candles. We look to see for that disagreement, that discord between the buyers and sellers. Now here, for instance, we have that disagreement, and this is going short. Now, it's going to be short-lived. It's not going to be a big trade. Why? Because the buyers are announcing that they are not in agreement with this trade going short. Now, here, they've agreed. They've conceded to buy at a lower price, but the sellers are up here. So when their point of control changes, where they are comfortable purchasing and offsetting their trades, then that's when we see a continuation of a trend. Now in this case, this is a 10-minute. I don't expect this trade to go further than 2084 and a quarter. So from where we're at right now, which is 2085 and a half, that's not bad. That's about a point. I can live with that for an example. But in reality, I would prefer to see if they just collapse and drop like a stone. But I don't think so. I think it's just a small correction before consumer confidence comes out. Now, being that said and done, we're at a crossroads of information here, because I would have preferred this trade over this one, even though this one is going to generate us a positive result. But why this one? Because this one is telling me and announcing me, let me get the pointer because I'm tired of the crosshair. This one is telling me and announcing that there is a significant reversal in play. Why is that? Because the power dot formation tells us that they are going to do a tremendous amount of high frequency trading to offset their risk to the downside. Now, what does that mean? That means that they're going to try and offset as many orders as possible here to get out of their short positions before the buyers come in and take this long. So this trade is significant from that perspective, because it has all the elements that we look for. It tells us that there's volume, momentum buildup, and liquidity that's going to come into the market. It tells us that there is an imbalance in the direction because the buyers are giving notice, and they're giving a 2-candle warning, being that said here. We look at it from this perspective. We go back 1, 2, sometimes 3, but in this case, this is the one that does it. So here we're seeing that imbalance take place, and here it continues. That's 2. And here they come in and they inject liquidity. Now I want to show you something, because this is basically where it's going to shock you, and you're going to say, whoa, wait a minute. What you're preaching doesn't make sense, because I've never heard this before. You're right, you haven't. And so what we show you is basically that there is volume divergence, and that they've been playing you all this time because you didn't have the right information. The reason why you have been lacking confidence in your trades is because of fear and doubt. We let fear and doubt blind us because we do not understand what is happening around us, why the decision process has been made to go in a certain direction. So here we have all the elements. We have a power dot formation. We have an imbalance in the candles, showing us that the point of control for the buyers and commitment of traders is completely off. This is not an average of where they're offsetting. And I can assure you that there is, that volume profile doesn't work. Let's put volume profile, because it wouldn't make a difference in the world to see that they're coming in with tremendous amount of volume. Oh my goodness, it's the end of the world. No, it doesn't mean anything. It's a bunch of nonsense. See, here they're saying, oh, the bears are coming into control. I don't care what they're saying here. I want to know what they're saying here before this trade takes place. I want to have complete confidence in my decision process that the trade that I took is the right one. Now here, for instance, based on what we're seeing here, I'm seeing that they're going to continue because the buyers are conceding to buy at a lower price and the sellers are offering at a lower price. And so suddenly you have cooperation. You have commitment of traders. That is what you have. Now, we would have never taken this trade knowing that they were having a bullish run. But the reason we entered is because we saw an imbalance in the candles, giving pretty much a 2-candle warning. So being that said and done, I'm very comfortable with this trade. However, I'm not comfortable with the fact until it breaks below this price level, then I'm jumping for joy. 20.84 1/4. Why? Because there's a pivot right there. What does that pivot do? That pivot tells us that that has been a strong resistance and could now be a very strong support level at this point. So what they do is that they map out the trade for us. Well, we map out the trade for you. What they do is try and deceive you. So this is a very interesting concept. And for some of you, it may take some time for you to really wrap your head around it and understand it. But at the end of the day, what you will discover is that what we are doing now is that even though, for instance, we would have taken this trade, and I took a trade last night on the DAX, actually. I'll show you a snapshot of it. It was a good trade. I went long, made 2,000 euro on it. But what this is showing you right here is that as we enter the trade and it goes long, there's something different here. We're seeing the imbalance. We're seeing that there's volume and momentum buildup. But where's the volume? You talk about volume, but I'm not showing it to you. Oh, really? Well, this is where our toolkit and our volume indicator, which is proprietary, comes in and blows everyone out of the water. So here's where we look at volume. So we look at volume right here, and let me get, again, the pointer. On this candle, we've been able to show you the difference between the buyer's order flow and the seller's order flow. So here you have 1,943 million, or in this case billion, that has come into from the buyers, and you have 1,973 on the seller side. Now you have a negative of 30 million. What does that mean to you? What that means to you is that you have a bullish candle with bearish volume. That's unheard of. Why is that unheard of? Because you cannot comprehend the value of that information. It is so valuable that numerically, if you're an engineer, if you're an accountant, if you're a mathematician, if you're a scientist of any sort, the formula is only as good as it adds up. Otherwise, it's useless. Well, this formula is practically flawless. Why? Because we're able to tell you that the buyers now prefer to buy at this level and the sellers prefer to offer at this level. Now that's pretty significant, and that's a significant statement, because what we're seeing is that we're seeing the real volume in the trade. Now, what do we see in this candle? We see a tremendous amount of high frequency as they're coming down. 2,062 on the buy, to 2,823 on the sell, difference of 761. That difference of 761 are limit orders that the buyers did not offset. Why is that? Because they were going to stop the flow to the downside, and they were going to hold this price level, and that's where this little golden dot comes in and says halt. Here's where we're going to do our high frequency trading, and here's where you're going to stop, where I'm going to stop you because I'm going to come in and take control. So we're showing you when they can come in and take control. Now this candle here, for instance, you have 1,568 on the buy, 1,890 on the sell, a difference of 322 million on the sell, which did not get offset. It did get offset here, but there was still excessive negative order flow that did not. And then suddenly this candle comes in, and then it just more or less balances out. Now, this is very significant. Next candle, we see that there's more negative volume that is still not getting offset. Why is that? You have 364 million and they're not pushing it down. Are you kidding me? And that's where this indicator becomes extremely, extremely valuable to you, because it tells you the real support and resistance level that they're establishing for the trade. So if this was a regular trade that you were looking at just by candlesticks, you wouldn't be able to see where the imbalance was in the candles. It would have evaded you completely. So here we're able to see it. Now, the fact that they could not break below this price level, and then here they did, and I'm watching that trade as it plays out, that it ain't over yet. See, this candle here has positive volume, so this is where they do the shift. Now granted, the sellers are not in agreement, but the buyers don't care because they had already given fair warning that they were going to come in and take control. And so once they did that, they come in with a tremendous amount of volume and basically take control of the trade, and then it's on. And so this trade went from, let's measure that, let me get the point dash, it went from 2078 and 3/4 all the way up to 2087. You know, that's practically, you know, almost a 9-point move. Now here, for instance, I told you this trade was going to be short-lived, and I said that because the buyers were not in agreement. Even though the sellers were announcing that they were going to take control, they did. But this pivot basically was the one that did it for us. Why? Because they did not break it. And that was something that I was concerned with when I saw this. And it met with a trend stop. So that's a no-no. Now we do have a pivot here, but that's insignificant from the perspective that this trade is actually going to continue to go long. And that's a no-no. But it's good to show you because I want you to see. Now, there is an imbalance here right now in this candle. What is the imbalance? That the seller's point of control is down here while the buyer's is here, but the buyers have control of this trade right now. You see how they're taking this up and the sellers are still here? At any moment, the sellers can change. Now, does the volume profile make a difference in telling you that it's more bullish than bearish? No. Would you have seen this trade, you know, push from this level based on the volume profile? The answer is no. It would not have given you any reason because it was more bearish than it was bullish. Now, even here at this level, the volume profile didn't do anything. Now here, see how it disappeared? It means that the sellers have conceded and they're offering at a higher level, which is not a good thing for us because now, you know, we're basically down a few ticks. And I hate being down a few ticks, quite honestly. It disturbs me. So I don't think, if it doesn't break above this pivot, and that's where it's basically holding right now, it's going to continue. If it breaks above it, it flies. And if not, it retraces slightly and probably maybe, you know, come down slightly. But you see how right here, right where the pivot is, the sellers have come to concede to offer at a higher price. That means that now the buyers have a green light to take this trade even further to the upside. But we did get notice of it. I did tell you this trade was going to be short-lived. The buyers were not in agreement because they announced it here. And sometimes they'll give you a 2-candle warning. Sometimes they'll give you a 1-candle warning. But at the end of the day, you were forewarned. Bottom line is that you were given notice. Now, this is a wide bar, make no mistake. And here, as they were coming down, we did see that. They did announce here on the 5-minute, and they did give a 2-candle warning. 1, 2, slap goes the weasel. And they slapped anyone that was short, including me. Now, of course, we're seeing a small retracement, and I mean a very small retracement. I don't think it'll be short-lived. I don't think it'll be significant. And volume profile saying, oh, they're, you know, the commitment of traders, it's going short. No, that doesn't mean anything to me. This is insignificant because here they're saying that the bulls are going to take it, and they didn't do anything. What I want to know is this. When am I going to get a signal that says, hey, I'm going to give you 2 to 3 candle warning before I take control of the trade and drive it again? That is what matters to me the most. And here, for instance, this trade here doesn't really make, this retracement doesn't really make a whole lot of sense. And I'll tell you why. Because the sellers have conceded to offer at a higher price and offset their trades at a higher price with the buyers. The commitment is here. So this retracement to the downside is not real. In actuality, this thing's going to continue to go long. So if I reverse it, you'll see that it will basically continue to the upside. It's not going to stop. And just maybe I'll make up that point that I lost right now. Because the fact that it opened here tells me that it's going to continue. Now, they were saying short here in volume profile. Not long. Now suddenly it went long. Do you understand where I'm getting at? So the information that you're getting is very significant. Now granted, this is a wide bar and it is significant because of the volume. But at the end of the day, they did give us an announcement. Can't avoid it. The reality is that now you can actually forecast a trade 2 candles before it actually takes place. Are there any questions? This would be a good moment. I know it's a lot of information to take in one session, especially because what I'm sharing with you is something that really no one out there has a grip on, at least not a complete grip, because what we've done here is that we're taking every component of volume and we've designed our algorithms and indicators around them. We are redefining volume spread analysis, volume price analysis, volume divergence, and order flow. Everything is encompassed under one strategy, one formula. Well, 4 formulas under one strategy. So how can you get this program? That is a good question, my good man. And that is one that I will send you an email to give you the offer. I don't like to really talk about that during the webinar because it distracts people. But I will send you an email since I do have you here in the webinar room, and we can talk about it a little further so that you can decide if this is something that you want. And many traders that I have come across recently, after they've seen my explanation and seen the videos and seen the success that we've had, see the value and the difference that it can make, because we're removing fear and doubt from your decision process. Now, imagine if the banks knew what you knew now. They wouldn't like you. But they can't change their algorithms because that is how they report their order flow. They know it and I know it. They're not going to change their mathematical formulas just because a few of us have cracked their code. That's a strong statement to make, but at the same time, it's a very significant one. Why? Because what we're showing is that we're showing how they are communicating amongst themselves. And before, that was only a theory, a conspiracy theory for that matter. But now we can numerically prove that they do communicate amongst themselves and they do give themselves fair warning. The only ones that are not warned are the retail traders. Now this trade's getting a little ridiculous, but it's still going to go long. It's not even, wait a minute, this one showed here, but no. We're going to wait on this one just slightly because they're probably going to use the trend stop here before going the trend dot here and then bounce from it. See, until I see the commitment of the buyers to concede to buy at a lower price, this ain't going short, because I need to see this immediately happen. See how it bounced right back up? That's one thing that this indicator isn't telling me, because here you're seeing how they backed off. Well, that doesn't really mean anything to me. I want to see what the real orders are in the live edge of the market. Here are the orders right here. Currently, look at how much high frequency they're doing in this candle. I mean, they're throwing the kitchen sink at it. 15,552 on the buy, 16,456 on the sell. You know, difference of 878 on the negative in order flow. That's huge. I mean, they should be literally spiking this thing to the downside. This thing should be going through the floor because the sellers have an additional 2,000, or in this case, 1,000, 1,200 now, 1,400, 800. You know, I mean, they had more control of this based on the amount of volume that they were bringing into the market. And now it's not so. Now the buyers have taken control. So you can see the volume as it comes in. You can see where they're doing their high frequency trading and how they're doing it. But more importantly is that you're not distracted by the order flow because you pretty much know that this trade is, how can we say this in kind words, is a distraction of the real intent. The real intent is to shake everyone off because they want to continue to go long. That's the real intent. No other way to, to say it. But they're going to come in and they're going to throw the kitchen sink at it. And look at this. I mean, you have 22,279 on the buy, 23,315 on the sell. You know, this is a bloody war. You have more negative order flow, but that thing is just going through the roof. That thing is just holding. So do the sellers really have control of the trade? The answer is no. At the end of the day, what they were trying to do was basically shake everyone off. And they used the trend dots as a support level. That's why the trend dots are very significant, because once they're broken through, then at that point is when you really see the trade. Because once they break through, then they have to redefine. And normally, if we don't see an imbalance in the candle demonstrating that they're going to continue, they'll either use the trend stop as a support level or the trend dots as a support level. But bottom line is that now you're in control. You can actually forecast the direction of the trade with much more, how can I say this, assurance. Why do I say assurance? Because you're not going to be distracted by all the smoke and mirrors that they throw at you. So look at it from this perspective. If you're a poker player, and I'm not, but I like poker, but I'm not a great one because I don't have the face for it. Whenever I have a good hand, I smile. And so, everyone goes, oh, he's got a winning hand. Well, most good poker players don't show their emotion. These traders, these programs do not show their emotion. However, what we're giving you is the ability to see what their hand is, whether they're bluffing or actually have a full house in their hand. And if they have a full house in their hand, then you got no business trading against them. But if you see that they're bluffing, then you can call their bluff, take the trade, and beat them at their own game. Another way to look at it is that if you like paintings, what we're doing is that we're painting $1 million picture for you. We're allowing you to see what you've never really understood before. And by doing so, we are taking you to the next level of trading, which is finally bringing everything that you've learned in the past and putting it together. Because volume is one of the major components of this day and age. It is how they digitally manipulate the trade. However, the human eye cannot see that. And so that's why we've created these programs to counter-engineer what they've done. So here, for instance, on this candle, we can see how the volume's coming in, and it is more bullish, of course. However, price action is not really driving it up as much as it should. Now, I do have an issue with this candle because the buyers did not want to go long any further, and the sellers basically are announcing here, as they did here, that they are not going to let this trade go long any further. But it is still at a higher level than these previous candles. So unless I see price action breakthrough to the downside, and I see that the point of control or the commitment of traders for the sellers is down here, I'm not going short. I have no need, because all I see is smoke and mirrors. Question? Oh, of course. Thank you. Have a great day. So what we are not doing anymore is we're not being distracted by the smoke and mirrors. We're able to stand our ground and say, hey, wait a minute, they're just trying to shake people off because they've already gone long and everyone knows we're going to continue to go long, but they don't want to, allow the retail trader to, take advantage of them. It's just not happening. Very significant, I believe. Very significant. Now, is there volume divergence in this trade? And that's the next question. That's what we're about to see right now. And I can assure you that there is. And based on how this thing is going, it's going to continue. Now, where is the volume divergence? You see how this one came down. It went up, but it came down. And this one came down. This one basically, they threw the kitchen sink at this, but it didn't really do anything. And then this one settled as it went long. It settled right below. Why? Because they spiked down, but then continued. Well, here's your divergence right here. And you're going to see that the way that I'm going to show you to read this is going to, for now, confuse you. But once you understand it, it's going to be such an enlightenment that it's like saying hallelujah. Why? Because now you can go in with much more confidence into the trade, with much more money into the trade, and know that you're going to win. Such is the case that last night I took this trade right before the European Open. I entered here, and then I took another 2 positions here. So that's 3 contracts. Now, why did I take this trade? That's a good question. You see how this was the real trade that I should have taken, but this was at the end of the day. And of course, nothing happened here. So, but the buyers, as the sellers were driving this trade down, the buyers were announcing, hey, we are not in agreement with what you're doing. And eventually we're going to come in and take control. So what they did here, you had 4 candles announcing that. And then here, the buyers came in with a tremendous amount of volume and stopped the trend to the downside. Literally stopped it. And then the sellers attempted one more time at the open to drive this down, and the buyers wouldn't buy because their commitment was up here, not down here. So when I saw this, and then I saw this candle open, I said, oh, this is it. It's on. And it went. So I took a trade from 11,066 to 11,094. 3 contracts equivalent to 2,112 euro. In less than, let me see, this is a 10-minute, 5-minute. So 10 minutes, 15, 20, 30, 10, 15, 20, 25, 30, 35 minutes. I was in the trade for 35 minutes to generate this. Not bad, huh? Well, now I'm recovering from the point that I lost. And it should continue, I'm not expecting it to be a tremendous trade, but if I make 20 ticks, I got a smile on my face. Why? Because they caught me by surprise here when I was looking at the other trade. And that's okay. That happens to me when I'm in the room and I'm teaching. But then I see what the real trade is, and I tell you, hey, no, this is no longer going short, this is going long. And if I would have not understood that they were giving us a 2-candle warning, 1, 2, boom, they came in. The fact that they came in and drove this candle so high legitimized the trade to the upside. That makes a difference. Now this is for trading E-minis. I can show you the same thing for Forex. I can show you the same thing for stocks, because our program you can apply to trading in the stock market, you can apply to trading in the futures market, you can commodities, you can apply to trading in the foreign exchange market. You get the best of all three worlds. So if one market doesn't give you a trade, another one will. At the end of the day, you got three to choose from. I only choose two. I don't like trading stocks. It's just not my interest. Can you do it with this program? Yes, you can. Can I teach you? Yes, I can. See, here we don't say, no, it doesn't exist in our vocabulary. Everything is yes. Yes, we can. And yes, we will. And yes, you will succeed, because I'm going to take you by the hand and get you there. I'm going to show you what you've been missing all this time and what you've been desiring. You're going to see through the lie of the trade, because you're no longer going to be deceived from it, which is what they try and do. They try and deceive the retail trader. Except now you're on the VIP list without really being on their VIP list. But you are, because I just put you there. And that's a good feeling to have. Why? Because it allows you to come to the conclusion that trading, as difficult as it is, doesn't have to be if you have the right information. That, in the end, is what truly matters, having the right information. If you have the right information, then you can assess your risk, you can assess your entry better, you can even, in this case, identify where your exit is going to be. But more importantly is that you have time. Time is in your hands. Now, is this real volume divergence? Yes. Why? Because this is a 50% line, and this volume bar right here didn't really, as it came down, they threw the kitchen sink at this one. But they didn't drive it. And so then the next candle comes in, and it's a continuation. They come down the trend stop and they continue, and then suddenly, they're trading above, they're settling their orders above the 50% line, showing that they are bullish, that they are going to buy the market, and the sellers have agreed and conceded to sell, above the 50% line, making this a bullish trade. So this indicator, not only does it give you the numerical value of each candle of how many orders are coming in, but you can also see the divergence. We call that brilliant, because now we can pinpoint exactly what they're going to do and when they're going to do it. And we can understand the numerical value of the trade that has evaded us all this time. Now at this point, I'm concerned that you have 3 candles that are announcing here the sellers are not in agreement, but they haven't come into control. And here, we don't have a point of control for the sellers here. It's probably right under this, which is in the middle, and this one here. However, the fact that this candle opened at this level, did not open here, tells me that they got one more leg to go. And there it is. So, are there any questions? This would be a good moment. I know it's confusing, but believe me, change requires an open mind, dedication, time to study, evaluate what you've been doing wrong. And sometimes it's hard, because when you don't want to admit that you've been doing wrong, because our ego gets in the way. I'm going to show you to put your ego aside so that you can wrap yourself around the truth of the trade, so that your decision process becomes extremely metallic and not emotional. See, we trade with emotion because we allow fear and doubt to blind us. I'm going to help you remove fear and doubt from your decision process so that you don't trade with emotion. but you trade based off the information that you're getting and the confirmation of the numbers. The numbers don't lie. Math does not lie. You know, I love math. I love chess, but I love math more. Chess only allows me to think 4, 5, 10 steps ahead of my opponent, because that's what we're playing. We're playing chess against the bank's programs. Their thinking is 10, 20 steps ahead of the retail trader. Well, now we basically got their rule book. And so now we can see their mistakes. See, they just made the mistake of the century, and we basically just discovered it. So, as much as I would like to stay in this trade further, and I would, but I think that it's time for us to go look at something else. I don't think it's going to go any further. Maybe just 2 more ticks. Let's see if it breaks. We're about 3 more minutes. Oh, no, it looks like they're going to break. If it goes to 293, then I'm pretty much done. Let's see. It's a quarter. No, it's holding. Oh, there it is. Let's see. Come on, push up. 3 more ticks. Come on. Give it up. Make it worth our morning. But with all the noise that we saw here, you would have said, no, I'm not going long, Ricardo. You're crazy. You're out of your mind. No, the program doesn't lie, because they can't hide their volume and order flow from us any further. See, we do have the correct formula. Everyone else is giving you an average. I'm not. I'm giving you where the real commitment of traders is, on the seller and the buyer side. You see, they have the wrong formula. They just don't want to admit it. Yeah, I'm about to go flat right now. I agree. It's time to end their pain. Let's come on, one more. Just all right. That's it. Not a bad trade. You know, fairly decent trade. Did volume profile make a difference in my trade? No, not at all. This was telling me to go short when our program said go long. Nice trade loss. Did I have a loss? God, I thought I came out ahead in this trade. So, yes, at the end of the day, what we're looking for is something more significant than what they're willing to give. Let's take a look at crude. There's always something nice about crude. And you know what? I saw this trade right now. I saw it earlier before we began. I could kick myself because we could have taken this trade. It had every element. Why? Let me get the pointer. It's okay. You know, I can't let my pressure go up because my sugar spikes, and then I have to go walk for more miles. Did you take that trade, Hector? Do you have a smile on your face this morning? So here, for instance, see how we have power dot formation. It's telling us at this particular moment that there will be a lot of high frequency trading done around this price level, and that the buyers are going to take control. Now, they announced it here, they announced it here, they announced it here, and they certainly announced it here. So you got 3 candles announcing it. What was the next candle? Boom, to the upside. When this happened, you know, they always do a little small retracement to try and get out of their positions before they slap you and take it long. So here they went from 40.04 to 40.45. This would have been a 40-cent trade, equivalent to $400 in one contract. Is the volume profile doing anything to guide me, to tell me jump in? No, not a thing. Now, you know, what this is telling me here is that the sellers are not in agreement, and that they are going to come in and take control. Now, I would agree if in this candle I would have seen the commitment of sellers, their point of control down here. Then I would say that is a true imbalance the way I see it here. This is a true imbalance, and I will make this bigger so you can see it. See how the point of control of the buyers is here and the point of control of the sellers is here? This is a true imbalance. But they did announce here, 1, 2, 3, last attempt to the upside, and then they pulled the trigger down. So in this case, they're pulling the trigger down. Now, what I don't like about this trade is that it's not giving me time to react to it. It's too aggressive. This one announced they were going to take their sweet time. I would have thrown the kitchen sink at this one and not given it two thoughts. But now here, it's a little different. So, and I don't like to, jump in a trade after I've missed the entry, because there will always be another trade that will present itself. Let's take a look at gold real quickly, because I saw that gold was going to be a little active. And it was. It came down. I looked at it when it was here, pulled down, came back up. But every time that it was coming up, you see how the sellers were not in agreement. And then suddenly, and they used the trend stop here as a resistance level, and they slapped everyone to the downside. Now, this isn't a big move. It's a $2 move. Well, $2 will get you about $200 per contract, which is not bad. You throw 4 contracts at that because you know that that's the direction, and suddenly you made $800 on gold. And you didn't lose sleep over it because you were in and out, just like I was in this trade on the DAX last night. It was about 11, and I looked at it and I was like, should I take that trade? Should I slap them tonight? I was thinking, I gotta wake up in the morning, for the webinar, but it just looks too easy. It just looks too easy. So let's take a look at some foreign exchange, some Forex. Now, this is the Japanese yen. And on Forex, you actually have to look at a higher time frame. You have to look at the 15, the 10-minute. Why? Because see here how we have power dots? Now, normally, I would say do not go short. Why? Because they're not going short, they're going long. However, in this case, you have the sellers that are not in agreement, and they showed their initiation here. But here, for instance, when this opened, it balanced out here. So I would be more committed to taking a trade long once it retraces slightly. But I do like this trade long. And what I'm willing to risk on this is very minimal. This is just about, and why do I say very minimal? See how this is showing this little diamond? This is because of the volume profile. It doesn't signify anything else except that. Now here the sellers are coming in, they're pushing it. Are they really? Let's see. Let's see if you're right or if I'm wrong. Well, I'm seeing the buyers come in and drive this thing. The sellers don't have, are coming in with volume, and you can see it right here. Let me bring this over. Look at the volume. You got 10 million on the buy, 11 million on the buy, 13 million on the sell. Now they're evenly matched. And here it is. Ow. So where was the volume divergence? Well, we'll get to that in a second. But I really like this trade long. So we'll take a position right here at 112, 122.82. I'll risk 10 pips. I won't risk more than that. Now, let's analyze this. It's a good example. Number one, we have power dot formations that have repeated themselves, and that's a very, very strong signal. That's one. Number two is you see how it formed, when the power dot formed here, we go back 2 candles, and what did we see? We saw that the buyers were never truly in agreement as the sellers were bringing it down. Now the volume indicator, the data box, will tell us what that story actually meant. Well, here, for instance, we have 104 million on the buy, 139 million on the sell. Just because we have negative 34 million on the seller side does not mean that the sellers control it. No, what that means is that they're doing all their high-frequency trading here, and they're trying to offset as many orders as possible before the buyers come in and cut their heads off as they take it up. So what they did here is they try to offset as much as possible. Let's go to the previous candle. Look at the volume here, 109 million on the buy, 123 on the sell. Again, a difference of 13 in orders that were not offset. And then this one, 120 on the buy, 158 on the sell, difference of 38 million in orders that were not offset by the buyers because they were not in agreement. So then suddenly the buyers come in this candle right here, and they bring in, and they price action drives it up, but the volume isn't there. It is a bullish candle with bearish volume. So that means that the next candle will initiate a bearish trade before it goes long. Why is that? They have 112 on the buy, 123 million on the sell. 9.8 million in difference, and I'll explain why you have that differential later. Then here, of course, they come in, the buyers come in, and they say, no, I told you I was going to give you time to get out of your short positions before I took control. And so now you have the buyers come in and literally bring in their liquidity and slap them across the head. 159 million on the buy, 121 million on the sell, a difference of 38 million, and the crowd goes wild. Goal! Why? Because the buyers come in and literally take control. Now, this candle, I would have expected this candle to continue the drive up. Why? Because it opened here. But they're retracing, of course, and this is a bunch of all the nonsense taking place because it's highly correlated with the Dow and the E-minis right now. If we look at the Dow, and let's go look at it briefly, you'll see the difference. But right now, they still have volume divergence to the upside. Where is it, Ricardo? Well, I'm going to show you right now. And this is where it becomes very, very unique. Because here, see, this is an outside bar, and this shows you that they threw the kitchen sink at it, but they've been coming and driving this thing up. Now, as they're coming up, of course, finally we see them make the final push to the upside, and again, even though this has been a trade to the downside, we still have divergence to the upside. This thing should have come down a lot harder by now, and it hasn't. You have the point of control of the buyers up here, and the sellers just haven't appeared at all, which is a no-no in my book. However, in this case, it favors us, because if they really wanted to control this, we would have seen their commitment down here, and we would have seen a lot more volume into this bad boy driving this thing down. So right now, the volume is actually very light in comparison to these last three candles where they did all their high-frequency trading. Look at this. You have 56 million on the buy, 55 million on the sell. Difference of 1 million. When the volume is that light, it's very significant because it says that the sellers are no longer interested in driving it that much. Now, in this case, even though they retraced, the buyers are not in agreement. They're announcing that they still want to take control and take this thing long. So in this case, I'm going to assume that the next two candles will be the last warning, and because we still have power dots forming here, that tells me that this is a very strong support level, especially because they repeated it again. So is this trade going to take its sweet time? Oh yeah, it's going to take its sweet time. But at the end of the day, it should come all the way up here. Now, if I'm right, and it comes all the way to 123 even, that's a pretty decent trade. That's a 20 pip trade. Now, granted, this pair hardly did anything last night. I mean, you couldn't kick someone to make them move this trade. And that's okay. Sometimes, when you find trades like this, see, like here, for instance, see how this formed here at the end of the day and the beginning of the new day? It was announcing that they were going to go short, but they didn't. They spiked above. And even when they spiked above, you had a signal telling you the sellers were not in agreement to go long. and that they were going to come and take control. So what do? They came up here, they held it, they pulled them back, and then they slapped them across the head and beat them down. And then they really took it down. But it was 20 pips. Well, the same thing here. Look at where the buyers have been announcing that they are not in agreement to take this thing short. 1, 2, 3, 4, 5, 6. 6 candles. And then finally here is where they basically halted everything. Why? Because this was the previous price level that they've been holding. So now, if they break below this, then I'm out. Like I said, I'm not going to lose sleep over 10 pips when I've already given them a lesson last night and this morning. But the buyers are signaling here that they are not in agreement that this trade go down any further. So what could be happening, the longer they take to rebalance their positions here, the bigger the trade. So in this case, the buyers are actually letting the sellers rebalance their risk around this price level. And this is called volume price analysis. I know that what I'm speaking is highly advanced, and it takes time to understand and comprehend, what is happening. But I promise you that if you continue to come to the room, eventually this will click. It will make sense, and you will have that moment, that epiphany, that moment of enlightenment where it's an aha moment. You're aha, that's what's happening. And then you'll discover that trading doesn't have to be that hard anymore. And you can see it in the ebook. So if you got the ebook, read the ebook. You can see the videos, the video that I did, that I did a video where on that ebook made over 400 pips in one night. So I must be doing something right. I can't always be wrong. And I can't always be right. But it balances out. And I'm right most of the time. And when I'm wrong, I live up to it. But the trades, my positive trades always outperform my small losses for the X factor. Consider the X factor, There's news that comes out and just throws the trade upside down, inside down. And that's why you should look at fundamentals. You should look at what the news is bringing, because you never know. You never know what this will bring. See, for instance, here, consumer confidence is not really that negative. I mean, it was better than expected. They were expecting worse. This was better. So, would it affect the dollar? Yes. However, under current situations, realistically, we both know that consumer confidence in Europe is not the greatest right now because of the terrorist attack that they just went through. Very, very difficult, for people in Europe right now. But we look at the trade from a different perspective. We look at it without the emotion. We look at their emotion, their decision process on what they're doing. Now, see here, for instance, this is saying short, short, short. I mean, everything's coming down. The world is falling apart on you, Ricardo. This trade's going down. And when I look at the volume, I'm like, 48 on the buy, 86 on the sell, difference of 38 million. Are you kidding? You should have come down through the floor with that type of excessive negative volume. Why haven't you? Because they've already decided not to. Now, for some reason they did, then that'd be a whole other story. Now, here, since the buyers conceded now I'm concerned. Now I'm analyzing and saying, okay, let's see what this does. But the fact that they announced here, I know that there's a 2-candle warning. I gotta wait. Now, if they sustain themselves above this level, then at that point, I know it's over for them. No question about it. So if I know that this is the level that they're playing around, then I'll just draw a line and I'll go to the smaller time frames to see what the bigger picture is on the smaller time frame. Put it 3. So now we know that this is a price level 122.74. So now we can go to a 5-minute. And I'm showing you this on the smaller time frames. Imagine what I could see. If I would have seen this form here on the smaller time frame, if I would have had another chart up, I would have not gone short. But now I can see the bigger picture. What is the bigger picture? The buyers are not in agreement to go short. 2 candle warning, 1, 2. So this one has to turn. If this one turns, if this one holds, then we know that's going to go long. Now let's take a look at the volume here. This is very significant. Hardly no positive volume, all negative right now. 6.2 million on the sell, 0 on the buy. But here you had 39 on the buy, 72 million on the sell, difference of 33 million, and they didn't break below this price level. Are you kidding me? No, I'm not. What that's telling us is that the sellers couldn't find buyers to buy below this price level. That's what it's telling me. Now here suddenly the sellers are still in control. You got 9.8 million on the sell, 11 million on the sell, 4.3 million on the buy. The sellers are in control, Ricardo. Get out, get out, get out. No, they're not. Because this price level has been defined by them already as a support level. If it's broken, then yes. But if it's not broken, they're mine. Now what did this candle announce? Almost a perfect balance. Look at this. This is a bearish candle with bullish volume. 52 million on the buy, 48 million on the sell. Difference of 4 million. Now, that in itself is an anomaly, is an imbalance in order flow. And this one here, again, very high in volume, but they didn't go through the floor, and now they're reversing. But get out, Ricardo. They're going to go short. They're going to go short. No, they're not. They've defined this price level right here. They're pretty much done. Now, I didn't like the fact that they did this here. So now I will be very comfortable when I see this trade go above 122.80. The minute I see price action at or above 122.80, and why do I say that? Because there are power dots here on this 5-minute. More importantly is that they'll break above this pivot, which is where where they're at. That means they got to go to this one, and that means they got to go back to this one, which is my entry. And if they break above this, then it's on. Then we know they're going to come up here based on this, and then finally up here. So it's Friday. They don't want to trade aggressively. They want to leave everything in balance for Sunday and Monday. And I understand that. They look forward to the weekend just as much as we do. The problem that people make sometimes is that they think that Fridays are the best days to trade. Not necessarily. Don't ever go in on a Friday expecting tremendous moves. I was really shocked yesterday when I saw this trade, and I wasn't going for a lot. I was going for, right here. And then when it broke through, I said, oh, wait here. But then it went even higher. The trade went even higher. It would have made twice as much. But I was tired, wanted to go to bed, and I had to run the room today. So, are there any questions? This would be a good moment. I want you to relax. I want you to think about the questions that you're going to ask. And there is no wrong question, ladies and gentlemen. I've already made all the wrong questions for you. From this point, it can only get better. Change is good when it makes sense. That's the only time that it's good, when it makes sense. It's hard. It's hard to change. Believe me, it was very difficult for me to come to a conclusion that this has all been a game by them. Complete deceit. A complete lie on their part. But now that I see the lie and it's so clear, I can't avoid taking advantage of the truth. There's a saying, the truth will set you free. God wasn't wrong when he said that. He was so right. See, here we don't have, these meetings with God where, oh, please come back. Please, I promise I'll never take that trade again. I know I made a mistake, but please. No, we don't have those conversations. We have, thank you, Lord. What a beautiful trade you gave me. Can I have another? And then when you're done with your trade, you say, amen. Why? Because you won. That's why. That's the difference. That's called knowing what you're doing, having the right information, and not letting fear and doubt blind you from the real trade. So we have an additional 15 more minutes. Make it count. I know that some of you have a question. For those of you that are interested in the software, my suggestion is that you email me. I'm going to put that in the chat right now. You can email me at ricardo@phoenixtradingstrategies.com. Let me see, I spelled it correctly. Yes. You can Skype me. My Skype is Ricardo@PFG. You can, if you're brave enough and you're ready for the right change, you can call me. I will take your call. I will take you by the hand and I will take you to the next level that you want to be. And my phone number is 818-431-1357. Let me repeat, 818-431-1357. So now we're 1 pip away from break even. No, now we're at break even. Again, I don't expect a big trade out of this. Like I said, right now it's Friday. Everyone is looking for, the end of the week. And there isn't really anything much more to be said or done in that regard. And we're positive, 1 pip. Now imagine if you were looking just to make 10 pips a day and you saw this and you said, I can do this. I can go in for 10, 15 pips. I have one client that literally just goes in for 10, 15 pips. He is a maniac because sometimes he'll find trades that give 30, 40 pips, but all he wants is 10 or 15 pips, and usually just 15 pips, but he'll go in with 5 standard lots when he's trading FX. And if it gives him more, then the minute he goes to 15, he'll hit the close button, just hit it. And then of course they'll give him a better fill and he'll come out with, possibly 18 or 20 pips. And we have these conversations. I tell him, why don't you let the trade run? It's obvious that you've nailed the entry. What I've taught you is working for you, but he's scared. He's scared of making more money. That's a problem to have. But he never tells me, I'm scared of money that I've lost. That's a conversation that we just don't have. It just doesn't exist. It's not in our vocabulary. He's just scared of making more money and letting the trade run and reverse against him. So he wants to take what they can give right then and there. And so he'll slap 5 standard lots on them. He'll make his $800 to $1,000 and he's out of there. And he'll usually look for 2 to 3 trades a day and he will find them. And he's very happy with that. I like finding 1 good trade a day, maybe 2 if I see it, and if I don't, it's okay. It's not the end of the world. But I know that I'll get one good trade and I'll scalp their head. And they'll say, well, who is this guy? But they're not going to say that because I'm insignificant. What I take out of the market is nothing in compared to what they take out of the market. They can't see me coming. And that's okay. I prefer it that way. And you should too. Now, the one thing I know that they're not going to do is that they're not going to change their protocols. Because, see, they invested way too much money. Way too much money. I understand their protocols, and so I was, me and my team were able to counter and reverse engineer their programming, their protocols, because we understand how they report their order flow. We understand volume price analysis. We understand volume spread analysis. We understand order flow. We understand volume divergence, and you will too. At the end of the day, that's all that matters, is that you will too. Now, this trade should have exploded by now, and it hasn't. Why? Because the sellers are not in agreement. Now here they're announcing, they didn't announce it here, but they're announcing it here. See how their commitment is down here? The point of control is here. Yet the buyers took this thing to the upside and they said, I told you I was going to come in and take it long. I warned you right here. I warned you. I gave you a 2-candle warning and then I was going to come in, and that's what they did. But the sellers are not in agreement. So we'll see how this candle plays out. This ain't over. Oh no. And it's Friday. Out of all days, it's Friday. So of course, we can't really expect them to do a whole lot at this particular moment. And that's okay. If you know what to expect, you can plan for it. There is nothing better than preparing ahead of time and understanding what the trade is actually going to be. And if you can do that, and I can teach you that, then you will minimize your risk, you will minimize your losses, and your winners will go through the roof. But you have to understand every component of the trade, how news affects the trade, how technicals affect the trade. You know, here we're just talking basically about technicals. I'm not using moving averages. I'm not using MACD. I'm not using stochastic. I'm not using RSI. I'm not using any of that. Why? Because it's been counter-programmed. It's lagging. You know it. I know it. You've used it. It hasn't worked for you. And that's why you're here. You're here because I'm providing you a solution that you've been desiring for a very, 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 very long time. And I'm giving you time. Time is what I give you when you take a trade on. That's the one thing that you have time to determine. Is that the good entry? Is that a bad entry? How much am I risking? You know, how much am I willing to risk? If this trade does go, where is it going to head to? Now you can actually forecast the exit because of how they are showing their point of control in each candle. You can see where they prefer to buy and where they prefer to sell. And now you can actually see the real volume, the real order flow. See, for instance, here, look at that. You got 34 million on the buy, 46 on the sell. Does that make sense? This is a bullish candle with bearish volume? Really? Now, what that tells me is that they may not want to break that level, and that means that I probably should get out because it's not going to go any higher. That's what that tells me, because it is a bullish candle with bearish volume. So we'll see. Now, the fact that this opened here is good because it didn't open here. So if it continues, if it makes the move up, then I know that I'm good in this trade and I may, you know, take 10 pips out of their hide. Can I live with making 10 pips in a trade at this particular moment on a Friday when everyone wants to go home? The answer is yes, I can. The trend stop is in agreement, as you can see. The trend dots are right here. You can see that they came down, used it as a support, bounced, and so now you have more direction to the upside. Now, granted, this level has to be broken. I'll feel more comfortable once they break to 122.87 or above. Right now, I'm really not that comfortable. Number one, because this announced reversal, and in order for me to see reversal, I would have needed to see that in this candle. I didn't. So now I need to see this thing make a move up. If it does not make a move up, then I won't waste time. Normally, if I'm in a trade, if I don't see that within the first 4 candles, the trade does not unfold, it's time to exit, to leave the premises. and go look for something else. That's what that means. Nothing more, nothing less. So, are there any questions? I know it's a lot of information to take in, guys. It's okay. You can write down a question in the chat. All right, then let's wait and see what happens with this trade. Let's see how far it goes. Let's see what the volume is here. 25. Oh, practically at break even. No, look, the sellers are coming in. They don't want this to go up. They're like, no, I don't want you to take it up. And the buyers are just holding it there. See, look at that. You got 33 million on the sell, 26 on the buy, and price action at 28 on the buy. And if they break above this level there, it's on. 32 on the buy, 33 on the sell. Evenly matched, 33 on buy and sell. And the buyers are just coming in and slowly holding it. But they got one more candle, and that means they got 2 minutes of my time. And if in 2 minutes of my time they don't pop, I'm done. We have a question. Let us see. Oh yes, I'll send you the legend. I forgot about that. My apologies. Yes, I got the cigars. Thank you very much. They came in yesterday afternoon, actually. Haven't had one yet. I'm saving that for tonight, but thank you. So let's see. Come on, give it up. You know you want to give it up, and I want to take it from you. See, this is their algorithms just basically teasing us. And what I mean by teasing us is that we know they want to go long, but they are just trying to, how can I say this? They're trying to get people to just get out. And that's why they're not moving. And then suddenly when everyone gets out, bam, they hit it and they move it. But we know better because we can see the trade. We can see the intent. The intent is to deceive. There, see, pop goes the weasel. Now that's just 3 pips. And like I said, I don't think this trade is going to give much. And I would feel more comfortable if they broke above 122.87. That would be my comfort level. Because then I know that this trade is on. So now they've got my attention now. Now I'll hold, I'll wait. You know, we're up 4 pips, 5 pips. Come on, let's go. Give it up. Make it a good 15, 20 pip move. So we can all have a smile on our face. Now, again, the sellers are announcing they're not in agreement. They announced it here, 2 candle warning, but it did not play. And because this continued higher, this thing should have reversed. And we should have seen that the sellers were in disagreement in this candle, and we didn't. They conceded, so they didn't even play. Here, they did not agree, but did concede because the buyers came in to take control. Now, this is a bullish candle with a slightly bearish volume. 34 million on the buy, 36 million on the sell. Difference of 2 million, which is really hardly nothing. Now, this candle, we're at 17 on the buy, 14 on the sell. More or less evenly balanced. 16 on the sell, 17 on the buy, 20 on the buy. There it goes. Come on, baby. Here we go. Come on. Make it at least a 10 pip trade. You know, Make it worth our while, for crying out loud. That's why I said if it didn't break above 122.87, I was going to be like, they have challenged. Now, what's important here is that there's a pivot here. So that makes this a very dangerous level. That's why I said 122.87 to me is significant. But if they break above it, it's on. Come on. Take it up another 2 pips, just another 2, and then we know that you're going to fly. Oh, the sellers have conceded to sell at a higher price. Their commitment is to offer at a higher price, and the buyers need to take advantage of this now. Not a whole lot of liquidity in the market today, if you've noticed. At least not this morning. It's been very light. Imagine once the liquidity comes back into the market, we are going to tear them limb from limb. Let's see. Let's go. Yeah, that 122.87 is a very significant price level. Now, is volume profile doing anything for me here? Not really. It doesn't mean anything to me. It's not telling me that. See here, they said, oh, a lot of volume around this level, a lot of buying and selling. Oh my God, Ricardo. That didn't mean anything to me. This doesn't mean anything to me. Now here you have power dots here, and so that's why this is holding. See right there? Right there. But if it breaks above it, 122.90, that's where I think it'll hold for slightly, because there's a pivot here, and then if it breaks above that, then it should come up to 122.97. Let's see. Let's see if it gives. Oh, there's something wrong about this one right now, which I don't like. You have more negative volume in this candle. This is a bullish candle with bearish volume. You've got 57 million on the buy, 70 on the sell, difference of 12 million. And you have divergence here. Now, this popped right now. So if this continues, then we should hit our mark, which is 122.97. But we should come to the conclusion that around this level is where they could probably stop the trade. So I think they got one more candle in them to the upside. We're up 8 pips. So let's see if it plays. They've already broken above 122.87, which was significant. Now we need them to break above 122.90 where this pivot is. And if they break above that level, it's on. Then we'll jump to the next one, and that should be the end of the trade. Are there any questions? No questions? Okay. So I'm going to put my contact information one more time. Again, my email is ricardo@phoenixtradingstrategies.com. My phone number, if you have any questions, 818-431-1357. Yeah, see, they're playing this nonsense right now. Let's see. Let's see this candle. See, this candle had negative volume. Not a lot, but enough to make me think twice. Now this one popped, but has reversed. Not that we didn't get notice. We did. They gave us notice here, which usually is a 2 to 3 candle warning. 1, 2, 3, pop. You see the divergence here. And now is where they're holding, because they know that if they break above 122.90, they've got to come up to 122.97 or 120 or 123 even. So we'll see how this plays. More negative volume. You have 20 million on the buy, 38 million on the sell, 18 million. Now, I want you to understand that we've synthetically created the volume here on the FX side because there is no real exchange for foreign exchange. And so when people say, well, there's no real volume in FX, you're right. You can't really see the real volume, of all the banks. We have created it in a way that you can, because this data feed that we get from NinjaTrader, from Kinetic, has all 12 top tier 1 banks. And so those are the ones that matter. Nothing more, nothing less. But again, divergence is to the downside. This is a no-no. See, right here. So I believe it's time to exit the game. And 6 pips is not a bad thing. It's not a great trade, but I'm not losing sleep over it. Yes, there is a webinar next Wednesday. For those of you that have the software, you're already signed up. You should get an email an hour or two before we begin, which is Wednesday Pacific time, 11 p.m. to 1 a.m. Thursday Eastern time, 2 a.m. to 4 a.m. Eastern. And that's all that I have for today, ladies and gentlemen. I don't have anything more. I want to thank you very much for joining us today at Phoenix Trading Strategies. It is Friday. May you have a wonderful weekend. And we will see you Monday morning. Thank you again. Bye-bye now.